Did you see that the Feds raised interest rates by a whopping 0.75%? I'll show you what that means for both buyers and sellers. It's been all over the news. I'm sure you've heard it, that the Fed raised interest rates by 0.75 points last week. I mean, you can't miss it. It's been everywhere. That really is a huge change in interest rates, and we're going to start seeing that impact right now. Thankfully, you have me as your guide, Cynthia, your favorite real estate agent from the Houston, Texas home team, to help you understand exactly what this means for both buyers and sellers. Let's start with the buyers. Raising interest rates basically means that it's going to cost more money to borrow cash. That's what an interest rate is. It's the cost to borrow money. Banks, mortgage companies, they have money to give to the buyers, and buyers are willing to pay the interest on that money for the ability to buy a home. When you go through the pre-approval process, the lender verifies your income, verifies your debts, and takes a look at your credit history. From there, the lender's going to be able to determine how much house you can afford and what the rate is going to be to loan you that money. Obviously, the higher your credit score, the better of rate that you're going to be in. As you go through this process with your lender, you're going to start having these conversations about when to lock your rate so that you can get the best rate for your credit history, how much you're putting down, etc. Those rates fluctuate marginally day to day, but they're never going to be below the prime rate. The prime rate is that baseline interest rate that lenders use to compare against. As the Fed increases the rates, that prime rate is going to go up, and we're going to see that impact and trickle through the mortgages and the mortgage industry. All right, I know. That is a lot of economic speak, all right? How does this impact you as a buyer? Basically, what you're going to see is that as interest rates go up, your purchasing power is going to go down. Purchasing power is just a fancy term for how much house that you can buy. At this lovely chart that I have here, what I did here was compare your purchasing power based on your interest rate. At the beginning of the year, let's assume a 5.5% interest rate, 5.5, okay? I'm also saying we're gonna keep the monthly payment for your mortgage the same. Now we have the 5.5% interest rate, and you're purchasing a $500,000 home. Your mortgage payment, principal and interest only, will be about $2,275. As interest rates go up, you're going to see that the max home purchase amount you can buy goes down. At 6.5%, the maximum you can buy is now $450,000. You have lost $50,000 of purchasing power just by virtue of interest rates going up 1 point. When the Feds raised their interest rates, it went up by 0.75 points. So not quite 1%, but almost 1%. Let's raise the interest rate one more time from 6.5% to 7.5%. Again, going up 1 point. You will see that the maximum purchase amount now moves from $450,000 to $400,000. So a rate increase of 2% changes the amount that you're going to be able to purchase by $100,000. The maximum home price went from $500,000 down to $400,000 in the blink of a Fed's pen. So let's say that the prime rate is now going to hover around 7.5% for those with excellent credit. If you have less than stellar credit, you might see your interest rates go 8, 9%. And so that's going to drop your purchasing power down into the 300s. You've now gone from being able to afford a $500,000 house to a maximum of a $380,000 home. All of that is to say, buy dirt and buy dirt today. I'm obviously very pro buy dirt. It's going to have an impact on you, and it's going to have an impact on your ability to provide and create real wealth down the road. Let's take a look at the seller side of the world. Here's my trusty chart again. We know that as interest rates go up, buyers' purchasing power is going to go down. Because of this, we're going to see some buyers step away from the market altogether. These may be individuals that purchased a home or refinanced their home with a very low interest rate. These may be buyers that just decide it's going to be too expensive for them to move into the next home in their life. Or this is going to be buyers that just aren't going to be able to qualify any longer based on what the current prices are, what the interest rates are, and what their ideal mortgage payment is going to be. This is going to cause the pool of buyers available to buy your home at a given price point to shrink. Here in Fort Bend County, we'll start to see that with an increase in the number of days on market a property sits, as well as an increase in the months of inventory in the property, finally followed by prices starting to drop. The fact is, the lower the price, the larger the pool of buyers that's available to buy it. It's not all doom and gloom. I do not expect the prices to start crashing, okay? We have some stabilizing factors here in the Houston area that will help mitigate those losses. One of the main stabilizing forces is basically going to be the amount of buyers that we have coming in from out of state or out of area that are using cash to buy their homes. Think of all those people who were coming from California who sold their $1 million, 1,300 square foot ranch built in the 60s and are now coming into Fort Bend County because it's one of the best counties to live in and paying cash for their homes. Another stabilizing force is the strong economic predictions that we have for the overall Houston area, especially when compared to the rest of the country. So there you have it, folks. That is what the interest rate change means to you if you're a buyer looking to buy in this market, or if you're a seller looking to sell in this market. At the end of the day, we're going to continue to see interest rates going up. The reality is that the Fed will continue to pull on this lever to slow down inflation, which is something that is real and that we're experiencing right now. With respect to buying your home and selling your home, it still continues to be the best market you can to buy and the best market you can to sell. My name is Cynthia Contreras. I am with the Houston, Texas home team. If you have any questions at all, if you want to know precisely what it means for you, schedule a time to chat at www.cynthialetstalk.com. Bye now.